Hey guys, welcome back to Smart Trader. Hope you guys are doing great, and it is 2022, a new year. So let's have a lot of learning in this year too, and also execute that. So as part of our options learning journey, today we are going to discuss about very important topic: is the stock options better or the index options? So first of all, I would like to say the difference between stock options and index options for the beginners who don't know this. Stock option can be your Reliance, your HDFC, your SBIN. These are stocks. So an option related to it will be stock option, so specific to a company. But same way, index is nothing but, let's say, Nifty is an index, so we have a lot of stocks in Nifty. Same way, we have a lot of banking stocks in Bank Nifty. So these are two different indexes. So stock is a single company, whereas index Nifty 50 has 50 companies. Let's say Nifty Bank has all the banks related to Nifty. Those banks are present in Nifty Bank. So these are indices and these are stock options. So that was the major difference between these two. So now as a beginner, you started trading in options and you are confused. One is that your options buying, options selling confusion is there. But should we go with stock options or should we go with index options? So this is a common question. So like I'm already researching on these type of topics and I'm learning a lot about this and I'm sharing with you guys. So as per my research, see, even though I am into equity from so many years, it is very easy for me to predict the movement of equity, the movement of stocks, okay, a single stock. So I do my analysis. I am very good at it because so many years I'm doing the same thing. So it is easy for me to identify the direction of a stock option. Whereas Nifty and Bank Nifty is something which are not tracked much like a stock. But yes, I can do that, but I'm good at stock. But there are certain limitations to stock option that also you should know. So what are the major difference as per my identification? I will show you guys on the chart itself in the trading terminal. This cannot relate to somebody or generally. This is my experiences. Maybe someone is good and taking care of certain things, but I'm just telling as of my current experience in options learning, this is what I feel. So if you're able to look at my chart, for example, this is Bank Nifty. Okay, this is your index. Nifty 50 is your index. Let's say stock. Let me take an example of Reliance. There we go. So these are nothing but the stock option. Okay, this Reliance is a stock and this is a Bank Nifty. All the banks of Nifty, and this is your Nifty. So options related to it. So as per my experiences, these are the things which I felt, even though I have an edge towards stock options. Let's say 2470 stock option. So these are the options I'm just showing you for beginners. So this is a 2500 CE. I'm taking strike price. Let's say I'm just taking CE and PE for practice sake. Now Reliance is a very famous stock for options. Let it be SBIN. These are very much liquid type of stocks. Okay, now let's say we have something like NTPC. What's the price? 131.30, 9.75, 9.45. See, a 30 paisa difference also can make a big difference for a 9 rupees premium, right? So major difference over there. So, and the liquidity issue, it's not so easy to enter and exit on a market price. It will ask you to add a limit price, and that is a challenge. So if you're gonna go buy, it's gonna take a 9.70, and if you want to immediately scalp and sell, it's gonna go 9.40. That itself you lost 30 paisa. So there is a lot of slippages in terms of options in stocks. The liquidity is going to be less, not in every stock. For example, you predicted these stocks are going to go up. The option may not have much people trading in that particular option, so the liquidity is so less in that particular option, or the strike prices you want to do a long straddle, a short straddle, or strangle. You are taking a different strike price where there is nobody in that particular strike price, and there is a lot of slippages. This is what I meant, the gap. But same way, if you, let's say this is let's say Bank Nifty is around 37,800. Let me take 37,800 Bank Nifty and show you, let's say, weekly. Okay, so you see this, look at the liquidity. So it's going to be very quick, within seconds it is moving. Okay, so a lot of people are into this index, the liquidity is higher. If a lot of people were into stocks, I would have been very happy, because if the movements were so quick, I would have got an entry on a market order, and by then I would have scalped 1%, 2% and closed it, or maybe I'm waiting for a longer time. I have enough number of people trading here. But if you see a stock option, what happens? The movement is very slow and the slippages are big compared to, for a 9 rupees, slippage is too big. When you compare to this particular slippage, 20-30 paisa, for 200 rupees, it is different. So 30 paisa for 9 rupees and 30 paisa for, let's say, 200 rupees premium is totally a different slippages. And if you want to enter on a market order, you get an entry in index. So Nifty and Bank Nifty are very much liquid, and Bank Nifty is very popular. So a lot of people trade in Bank Nifty. Because of these reasons, it is easy for you to enter and exit. Yes, the profit is going to be minimal in terms of Bank Nifty, and the loss is also going to be minimal, because in stock, if you have to do your predictions, it is just one company. If you do right, you make a lot of profit. If you make wrong, you make a lot of loss. Yes, you may hedge your position and all that, but comparatively, I'm just telling you the movements. And even though you are good at stock options, you're good at predicting the stocks movement, maybe a short term you are doing, but that entry and that slippages is something which is gonna kill you. And as per my experience, that is gonna eat up your profit. Your chances of profit is gonna reduce because of that. You're not getting a right exit at the right time. Even though the current market price is at, let's say, 9.30, you're not getting an exit exactly. So you want to sell at 9.70, you need to wait on, because highest is 9.35. Okay, someone is ready to buy at 9.35. So you have to sell at 9.35 even though there is a gap. So you buy at 9.35, you need to wait for this to go to 9.70 to sell. Then you have to wait for a longer time. And during this time, a decay happens. Now, same thing, it can be done on the selling side also. You can take an advantage. Again, entry will take time. If you're doing a strategy, let's say 2-3 premiums, 4 premiums, hedging positions, you need to take 4 positions. You need to wait for every order to trigger, limit order. During this, slippages happens up and down, and you tend to lose that initial money. So if you're scalping, I would say stock options is not a good idea. If you're waiting for a longer time, if your prediction is right, then stock options can be done. If you are scalping or doing intraday, then I would suggest Bank Nifty or Nifty is the best option as per my experience, because the entry is smooth, your exit is smooth. All you have to do is predict whether it is going to go up, go down, or it's going to stay neutral. So based on this, you need to choose your strategy. If you're just doing blindly a naked buy, I would say it's completely risky. If you have a system, if you have a lot of experience in putting a strict stop loss and target, I agree. But generally the probability is so low, because selling has a higher probability, and that too using a strategy like, for example, strangle, short strangle, or some strategy with higher probability is good. Don't blindly just go and do buying and selling and leave it for time, because time matters here a lot. So if you are confused, as per my observations and research till now, Bank Nifty and Nifty is the best way. If you, in case you are looking into options trading, if you want to do scalping of options and intraday of options, Bank Nifty is the best examples for you guys compared to Nifty options. Stock options is going to be slow, slippages, entry is going to be very difficult, and only few stocks will be very liquid, few stocks will not be liquid. It's going to make a big headache for you. If you take a different strike price away from the spot price, it's going to become more challenging for you guys. That is very difficult. Whereas Nifty and in Bank Nifty, that is index options, has weekly and monthly. So weekly is going to be very volatile. A lot of people are going to trade because it's going to expire. That's the reason a lot of people short it. Whatever the option shorting strategies they are using. So that is the advantage in this Nifty and Bank Nifty. So do your observations just like me. Just put both of them and just observe, and just take a paper trade and see the difference in movements. It's going to be very quick in terms of Nifty and Bank Nifty, whereas in stocks it takes time, and the slippages only will eat your profit. But if you predict the direction for a short period of time, thinking that okay, this month it's going to go up, I bought a call option and it went up, you make a lot of money. But same thing, when it goes against you, you lose a lot of money, and you don't get the exit at the right time. So that was a short video for people who have this confusion, whether should we do stock options or index options. So my answer is index options. Do your own research also. This is my opinion. Like, I share what I do. This is my opinion as of today. Hope this video was helpful for you guys. If you like such videos, hit that like button, and see you soon with one more learning video. Till then, take care, stay safe.